Crypto, more than speculation. A conversation by UseItCoin.
Welcome to the deep dive. Today we're diving into cryptocurrencies, a topic many of you might approach with a healthy dose of skepticism. A recent survey showed that a significant majority of Americans have reservations about their safety, and it's easy to see why, with headlines dominated by talk of bubbles and dramatic price swings.
Absolutely. That caution is understandable. The mainstream narrative around crypto has often focused, well, pretty much just on the speculative angle. But it's fascinating. If we look beyond that surface level, a much more compelling story emerges about the fundamental value and the surprisingly wide range of real-world applications.
Exactly. Our mission in this deep dive is to, well, unpack that story. We've gathered some really interesting material, including academic research that strongly argues for the economic importance of cryptocurrencies, moving past just the hype.
And we're going to explore this with you in a few key stages. First, we'll get to grips with the core technology, blockchain. Then we'll look at tangible examples of how cryptocurrencies are being used today, highlighting their economic impact.
Right. And we'll also tackle some of the valid concerns around volatility and regulation head-on.
Definitely. And finally, we'll discuss the crucial role that smart policy can play in shaping this evolving landscape.
It's striking to consider that even with this public skepticism, the global cryptocurrency market hit over $3 trillion in 2024. That kind of valuation suggests there's something significant happening beneath the surface speculation. Okay, let's unpack this. Let's start with the bedrock of it all. Blockchain. What exactly is it, and why is it so, well, revolutionary?
So at its heart, blockchain is a decentralized and tamper-resistant digital ledger. Now that might sound a bit abstract, so think of it like this. Imagine a shared Google Doc that everyone can see and add to, but no one can secretly edit or delete past entries.
Okay.
That's the basic idea of what blockchain achieves for transactions. This design leads to a really fundamental shift in how we think about trust. For centuries, we've relied on intermediaries like banks, right, to verify transactions.
Yeah, the middleman.
Exactly. Blockchain, by its very design, builds trust into the system itself, eliminating the need for a single point of control.
Okay, that shared, uneditable record book analogy really clarifies things. So how does it actually work? What makes it so secure?
That security comes from cryptography. Think of it as highly sophisticated digital locks and keys. Each transaction is locked, and only the right key can unlock it. And these locks are, well, incredibly difficult to break. These transactions are then grouped together into blocks and linked chronologically, forming a chain, hence the name blockchain. Any attempt to tamper with a past block would require changing all subsequent blocks across the entire network, which is practically impossible.
So Bitcoin uses this for secure money transfers, right? But you mentioned other possibilities with blockchain.
Exactly. Bitcoin's initial aim was to be a peer-to-peer electronic cash system for secure value transfer. But platforms like Ethereum have taken that foundational blockchain technology and expanded its capabilities dramatically. Ethereum is designed as a platform for what are called smart contracts and decentralized applications, or dApps. This versatility is key, to seeing the bigger picture beyond just digital currencies.
Smart contracts. We hear that term a lot. Can you give us a concrete example of how blockchain and especially smart contracts are being used in the real world beyond just trading crypto?
Absolutely. Let's think about supply chains. Companies like IBM with their Food Trust Initiative and Walmart are using blockchain to bring a new level of transparency and efficiency.
Right, I've heard about that.
Yeah, so imagine a mango making its way from a farm to your table. Using blockchain, every step of that journey from harvesting to shipping and arrival can be recorded and immutably stored.
So you know exactly where it came from.
Precisely. This means you can trace its origin, know if it was kept at the right temperature, and quickly pinpoint the source of any issues like contamination in case of a recall. IBM themselves defined blockchain as a shared, immutable ledger that facilitates the process of recording transactions and tracking assets in a business network, which, perfectly illustrates this shift from relying on disparate records to having a single source of truth.
Oh, that really highlights the power of this shared, unchangeable record. It's not just about faster transactions, it's about building trust and accountability into complex systems. And you mentioned efficiency gains beyond just tracking.
Absolutely. Because you're removing intermediaries and streamlining processes, the potential for cost savings and increased speed is significant. Platforms like Solana, for instance, can process thousands of transactions per second, which is, well, far beyond the capacity of many traditional financial systems.
Thousands per second. Wow.
Yeah, this speed, combined with the automation enabled by smart contracts, can revolutionize sectors like real estate, where the complex process of transferring ownership could become much faster, cheaper, and more transparent.
Okay, so we're seeing how blockchain's fundamental shift in trust and efficiency is leading to these real-world applications. Now, let's dig deeper into the economic significance. One area that often comes up is financial inclusion. How can crypto help those who don't have access to traditional banking?
This is a really critical point.
Yeah.
The World Bank estimates that around 1.4 billion adults globally are unbanked. Cryptocurrencies offer a potential pathway to financial services for these individuals, because all you really need is a smartphone and an internet connection, something many already possess.
Right.
You don't necessarily need the infrastructure of a traditional bank branch or, a minimum account balance to hold and transfer cryptocurrency. This can be particularly empowering in developing countries where banking infrastructure is limited.
That's a powerful idea, bypassing traditional barriers to entry. What about something like sending money internationally? I know those fees can be a real burden.
Oh, definitely. That's another area where cryptocurrencies are demonstrating tangible economic benefits right now. International remittances often come with hefty fees, averaging around, 6.75%?
That's a lot.
It is. For families relying on these funds, that's a significant chunk of their income being eaten away. However, platforms like Bitso, operating in the U.S.-Mexico corridor, have shown that you can facilitate these remittances using cryptocurrency for fees of under 1%.
Under 1%,
Yeah.
compared to almost 7.
Exactly. That difference can be life-changing for families, allowing more of their hard-earned money to reach its destination. This really challenges that initial perception of crypto as purely speculative, doesn't it? We're seeing tangible benefits for everyday people.
Absolutely. It's moving beyond just an investment and becoming a tool for essential financial services. You also mentioned the economic potential of Ethereum's smart contracts beyond just currency. Can you elaborate on that?
Yeah, so let's revisit our agriculture example. Imagine the smart contract that's programmed to automatically release payment to a farmer as soon as the delivery of their produce to a buyer is verified on the blockchain.
Ah, so automated payments based on real-world events.
Precisely. This eliminates the need for trust between parties who might not have a prior relationship, reduces the risk of delayed or non-payment, and can significantly speed up the entire transaction process. This concept of provenance, knowing the verified history and origin of a product, becomes much more robust with blockchain and smart contracts.
Okay.
Smallholder farmers in developing nations who are often vulnerable to unfair market practices can be particularly empowered by these transparent and automated payment systems, ensuring they receive fair compensation upon verified delivery.
That's a fantastic example of how smart contracts can build trust and efficiency in markets where it might otherwise be lacking. What about the stability of these digital currencies themselves? We know volatility is a major concern for many.
You're right. Volatility is a significant hurdle, particularly in countries that already face economic instability. This is where the concept of stablecoins comes into play. These are cryptocurrencies designed to have their value pegged to a more stable asset like the US dollar or even gold.
So they try to avoid those wild price swings.
Exactly. In countries grappling with hyperinflation, such as Argentina and Venezuela, we're seeing citizens increasingly turn to stablecoins as a way to protect their savings from the rapid devaluation of their national currency and to conduct everyday transactions with greater price certainty. So they're essentially using these digital dollars as a more reliable store of value and medium of exchange.
That's a really practical application in the face of severe economic challenges. It's fascinating to see these real-world applications emerge, and it's equally important to understand how these concepts are being rigorously examined in the academic world. You mentioned a paper earlier.
Yes, exactly. Hamildari and Martin, for example, have conducted research on how blockchain-based crypto assets can significantly improve the integration of physical and financial supply chains, especially in complex industries like construction and engineering.
Okay, how so?
Well, these sectors often struggle with disconnected processes, right, where the movement of goods isn't seamlessly linked to the flow of payments, leading to inefficiencies and reliance on traditional financial intermediaries. Their research suggests that using crypto assets for payments that are automatically triggered by verified product movement using those smart contracts we discussed can create a much more streamlined and efficient system, directly connecting the physical reality with the financial transactions.
So the payment happens automatically when the materials arrive on site, verified by the blockchain.
Something like that, yeah. This could lead to substantial cost reductions and faster project completion times.
That sounds like it could really cut down on a lot of the traditional friction in those industries.
Absolutely. And then you have Baglui and colleagues who proposed a really innovative idea, a tradable mobility permit system for managing urban traffic congestion, all powered by blockchain technology, specifically Bitcoin and Ethereum and smart contracts.
Wait, using blockchain for traffic, how would that work?
The concept involves using these digital permits to regulate traffic flow, with the trading and usage of permits automated through smart contracts within a network of connected vehicles. They see blockchain as a foundational technology for creating more efficient, secure, and dynamic urban transportation systems.
Huh. That's quite a leap.
It is almost hard to imagine our cities operating on a system like that. What are some of the unexpected societal shifts that could arise from such a fundamental change in how we think about movement? It raises some really interesting questions about urban planning and individual liberties.
It does. It's a pretty radical rethinking of how we manage something we often take for granted.
It highlights the fact that the innovative potential of applying blockchain extends far beyond just the realm of finance. And finally, Dwita and their team looked at whether Bitcoin and Ethereum acted as safe havens for traditional stock market investments during the initial shock of the COVID-19 pandemic in March 2020.
Ah, the safe haven argument. Did they?
Interestingly, their findings indicate that both did offer some level of safe haven protection during that period of extreme market uncertainty, with Ethereum potentially showing even more effectiveness in that regard. However, they also rightly emphasize the inherent high volatility associated with both Bitcoin and Ethereum.
So maybe a safe haven, but a very bumpy one.
Exactly. Building on these practical examples and academic insights, it's clear that while there's significant potential, we also need to address the valid counterarguments against cryptocurrency. It's not all smooth sailing, is it?
Not at all. The extreme price volatility is definitely a major sticking point for many people, and it's understandable given some of the dramatic swings we've seen, often driven by, well, market speculation and news events.
True. But it's worth considering whether this volatility might naturally decrease as the market matures. As we see greater adoption by institutional investors and as regulatory frameworks become clearer, could we see a stabilization similar to what occurred with other emerging asset classes, like gold or even the early stock markets? Maybe.
That's an interesting parallel to draw. It's possible, I suppose.
Mhm.
What about the security concerns? We frequently hear about cryptocurrency exchange hacks and individuals falling victim to scams.
Security is a very valid concern. However, it's important to make a distinction here. The core blockchain technology itself has proven to be incredibly robust and secure. The majority of successful security breaches tend to occur at the level of third-party service providers, like exchanges, which can be vulnerable to hacking attempts, or through social engineering tactics like phishing that target individual users.
So the underlying tech is strong, but the access points can be weak.
That's a good way to put it. So the blockchain itself isn't usually the weak link.
So the responsibility for security often lies with the users and the platforms they're using.
Precisely. And there are significant efforts underway to improve security at these levels. Enhanced education for users on best practices, the widespread implementation of multi-factor authentication, and the development of more secure and rigorously regulated exchanges all play a vital role in making the overall ecosystem safer for everyone.
And then there's the ever-evolving landscape of regulation. It often feels like we're trying to build the plane while we're flying it, doesn't it?
Regulatory uncertainty is undoubtedly a major challenge that the industry faces globally. Different countries and regions are still trying to figure out how to classify and regulate crypto assets. Are they currencies, commodities, securities, or something else entirely?
Yeah, that seems like a fundamental question.
It is. And this lack of a consistent global approach can create confusion, stifle innovation, and make it difficult for businesses to operate across borders.
But are we seeing any progress towards more clarity on the regulatory front? Anything promising?
Yes, we are starting to see some positive developments. The European Union's MiCA framework, for example, is a significant step towards providing a more unified and comprehensive set of rules for the crypto asset market across the EU member states.
MiCA.
This kind of regulatory clarity can foster greater confidence among both businesses and consumers, encourage more institutional participation, and help to mitigate risks like market manipulation.
So it's about finding that sweet spot where regulation protects people without hindering innovation, getting that balance right.
Absolutely. Thoughtful regulation isn't about stopping progress. It's about creating a stable and predictable environment that allows for responsible growth. The current perception of cryptocurrencies as being inherently high risk is partly a consequence of this regulatory ambiguity.
Mm-hmm.
Well-designed policies have the potential to shift that perception and pave the way for cryptocurrency to become a more integrated and trusted part of the global financial system.
Okay, so what does that thoughtful regulation actually entail in practical terms? What are the key areas that policymakers need to focus on?
Well, at its core, it needs to address several fundamental issues. First and foremost, consumer protection is paramount, safeguarding individuals from fraud and excessive market volatility. Second, ensuring market integrity by establishing rules to prevent manipulation and illicit activities.
Makes sense.
Third, monitoring and mitigating any potential risks to broader financial stability as the crypto market becomes increasingly interconnected with traditional finance. And finally, effectively combating illicit uses of cryptocurrencies, such as money laundering and terrorist financing. The Financial Action Task Force's travel rule, which extends existing anti-money laundering obligations to virtual asset transfers, is a key example of international cooperation in this area.
It sounds like a complex balancing act. Are there any regions or countries that are taking particularly proactive or interesting approaches to regulation, leading the way, maybe?
Yes, we're seeing different jurisdictions taking varying approaches. As we've discussed, the EU's MIAM framework provides a comprehensive licensing regime, offering legal certainty for crypto businesses operating within its borders. Switzerland has also positioned itself as a relatively crypto-friendly hub by adopting a progressive stance on distributed ledger technology and providing clearer guidelines for crypto-related activities.
Okay, Switzerland too.
And we're even seeing interesting pilot programs, like the Commodity Futures Trading Commission in the U.S., exploring tokenized stablecoins in collaboration with industry participants. These kinds of initiatives demonstrate a willingness to engage with the technology and develop tailored regulatory solutions rather than simply imposing blanket restrictions.
So working with the industry rather than just against it.
Exactly. It really underscores the need for ongoing dialogue and collaboration between regulators and the crypto industry.
So as we bring this all together, it seems clear that the narrative around cryptocurrency really needs to evolve beyond just the price speculation.
Absolutely. The underlying technology and its diverse applications have the potential for truly transformative impact, far beyond just the returns on investment. We're talking about reshaping global finance, streamlining business operations, and even fostering greater social empowerment in meaningful ways.
Like making financial services accessible to those who've been traditionally excluded, the unbanked population we talked about.
Exactly. That's a huge global challenge, and cryptocurrencies offer a viable and increasingly accessible solution for many. We're also seeing the potential to drive economic development in emerging economies through more efficient and affordable international remittances, and by providing a hedge against the crippling effects of hyperinflation.
Right, the stable coins.
Yeah. And let's not forget the broader technological innovation that blockchain is fueling across a wide range of sectors, from making our supply chains more transparent and secure to potentially revolutionizing how we manage everything from digital identity to intellectual property.
It really does highlight the need to look beyond the daily price charts and focus on the underlying utility and problem-solving potential. It's more than just numbers going up and down.
Precisely. Realizing this potential, however, requires a concerted effort. Individuals need to become more informed and move beyond the common misconceptions. Businesses need to explore how this technology can create new efficiencies and opportunities. And regulators need to develop smart, adaptive frameworks that protect consumers and encourage responsible innovation rather than stifling it.
And keep pushing the tech forward.
Definitely. Continued investment in research and development to enhance the scalability, security, and interoperability of blockchain technology is also crucial for realizing its full promise.
Of course, as we've discussed, the challenges of volatility and regulatory uncertainty are still very real. They haven't gone away.
No, they are significant hurdles that need to be addressed. But I believe the next chapter in the story of cryptocurrency will be defined by its real-world utility, by its capacity to solve tangible problems and improve people's lives in concrete ways. The focus is gradually shifting, I think, from the initial hype surrounding price appreciation to the development and adoption of practical applications that create genuine value.
So instead of just constantly asking how high will it go, perhaps the more important question is, what real-world problems can it solve? What can it actually do?
That's a fantastic way to summarize it. The long-term success and impact of cryptocurrency may very well depend on its ability to underpin a more inclusive, efficient, and innovative global economy, moving beyond the purely speculative aspects and focusing on creating real, tangible value for individuals and society as a whole.
Some incredibly thought-provoking insights. Thanks for taking that deep dive with us. It certainly provides a much more nuanced perspective on the world of cryptocurrencies. And for you, the listener, maybe the next time you see a headline about the price of Bitcoin, you'll also consider, well, the smallholder farmer receiving instant payment via smart contract, or the family receiving crucial remittances without losing a significant portion to fees. Definitely something to consider. Until our next deep dive.